Hi, thanks for visiting my channel. For anyone new to this channel, my name is Tanveer Chaudhary. I'm a certified financial planner and real estate investor. I make educational videos regarding wealth building, financial planning, and real estate investing. I post regularly and make one fresh video every week. You can visit my channel and find videos about different financial planning and real estate investing topics. Before we get started, if you think you learn at least one new thing from this video, all I ask is to like this video and subscribe to this channel so it encourages me to produce more valuable content for people like you. Topic of today's video is 4 tax benefits of incorporating which are not available to unincorporated businesses like sole proprietorships and partnerships. When you incorporate your business, your company becomes a separate legal entity which provides limited liability and a personal protection from creditors. There are also costs involved in incorporating, both for setting it up and managing on an ongoing basis. You have to weigh these costs up against any potential financial benefits. Before we start talking about the tax benefit of incorporating, I would like to mention here that incorporating won't be the right decision for every entrepreneur. You have to consider several factors first, like what type of business you own, how much profit your company makes, and your personal tax situation. Now let's talk about the 4 tax benefits of incorporating. First tax benefit of incorporating is the lower income taxes. Incorporated small businesses can pay very low income tax. Small business deduction can reduce your company's corporate federal tax to 9% on up to $500,000 of active business income, while the provincial corporate tax rate ranges from 0 to 3.2% depending on the province. Combined corporate tax rate therefore would be between 9 to 12.2% for a Canadian controlled private corporation. Compare this to your personal income tax rate, which could be up to 50% or more depending on where you live and your level of taxable income. Second tax benefit of incorporating is deferral of income taxes. If you need less money than your company makes in profit, you only need to declare the money you withdraw from the company on your personal tax return, which is usually in the form of salary or dividends. Retained profit inside the corporation can be used to expand the business, invest more passively for future retirement, or fund life insurance policies for tax advantages. By leaving the remaining profit in your corporation, you can defer paying personal income tax on it until you need the money for personal use. Third tax benefit of incorporating is family income splitting. You can make spouse a shareholder and then wait until you turn 65 before you pay them a dividend. Also, if your spouse works in your business 20 hours or more per week in the current year and has done that in any of the previous 5 years, there is no limit how much the dividend you can pay them if they are a shareholder. This can also help you share the business retained profits with your spouse, which can move you potentially in the lower tax bracket. So you end up paying less tax, and if your spouse is in a lower tax bracket than you, this could lead to a considerable tax savings. Fourth tax benefit of incorporating is lower capital gain taxes. There is a lifetime capital gain exemptions for incorporated businesses when you sell shares of a qualifying small business corporation. There are a number of conditions to satisfy in order to claim the exemption, but the potential tax savings could be substantial. For year 2023, lifetime capital gain exemption limit is $971,190. This could mean you could potentially pay 0 tax from the profit on the sale of a business. Let's say you sold shares of your business in 2023 for $1 million profit. You would only have to pay capital gain tax on the amount above the lifetime capital gain exemption limit of $971,190. This option is not available to unincorporated businesses because they cannot issue shares. Lifetime capital gain exemption can be used more than once until you reach the limit. That's all for this video. If you think information like this can benefit someone, please share this video. Also like, comment below, and consider subscribing. Thanks for watching and see you in the next video.